Kioxia has announced its highest ever first quarter profit. But what caught my attention was not the size of the profit itself. Even in the age of AI, the boom and bust cycle in memory does not disappear. What may be different this time is the shape of that cycle. After more than 30 years watching this industry, that is what I sense. Today, I want to explain, from a professional's point of view, exactly what feels off about these results.
Hello everyone, I'm Ty, with 31 years in the semiconductor industry. In this video, you'll learn three things. What is genuinely impressive about Kioxia's results? How storage demand is quietly expanding in the shadow of GPUs? And how to read the waves in memory pricing. Please stay with me to the end. As always, let's start with an everyday analogy to get the big picture. Imagine a town with a large warehouse company that stores things for people. This company doesn't make any products itself. It takes in the goods and important documents that everyone in town produces and charges them a storage fee. Recently, this town has been in the middle of a boom, with new factories going up one after another. The more those factories run, the more things pile up. Not just finished goods, but work records, spare copies of blueprints, duplicate ledgers. And once a record is handed over for storage, it can't easily be thrown away because someone may need it later. The warehouses filled up fast, and storage fees started to climb. As a result, the warehouse company posted its best profit ever. The whole town's attention was on the glamorous new factories, but behind the scenes, it was the warehouses making a fortune. Customers lined up for space, and even after price hikes, contracts kept closing. A true golden age for warehouses. But this warehouse business has a famous jinx going back decades. When money is good, everyone builds new warehouses at once. A few years later, there are too many. They sit empty, and storage fees collapse. Some companies can't take it and go under. Then, after a while, space runs short again, and fees shoot up. The industry has repeated this cycle for decades. So will this boom follow the same path? What's a little different this time is that the records being stored keep piling up because they can't be discarded. Even when the construction rush eventually settles, the records that accumulated remain and still need somewhere to sit. That's the heart of today's story. From here, let's look at how this analogy plays out in the real industry. Our subject, Kioxia, is a major Japanese manufacturer specializing in NAND flash memory, the chips that store data. It is the warehouse company from our analogy. On July 31st, Kioxia reported its results for the first quarter of fiscal 2026, and both revenue and operating profit set new first quarter records. Let's look at the numbers. Revenue was 1,767 billion yen, and the non-GAAP operating margin was 75%. That is an extraordinary level for a memory maker. On top of that, the company announced a 1-for-3 stock split and a share buyback of up to 800 billion yen. On the numbers alone, business is booming. Behind the strength are two things: growing demand for SSDs in AI data centers and a rise in the average selling price of NAND, the ASP. When people talk about AI chips, they focus on GPUs and HBM, but AI also needs storage to hold enormous volumes of training and inference data. Data center SSDs keep getting faster and larger, and NAND demand is spreading with them. Kioxia expects higher revenue and profit again in the second quarter and says AI-related demand remains strong. But the market's reaction wasn't so simple. The share price dropped sharply ahead of the announcement, and although the company guided to a very high level of profit, it came in just slightly below market expectations. That is where today's real topic lies. Now let me dig in from a professional's perspective. First, a shift in viewpoint. When the world discusses AI chips, it talks about GPUs and HBM, the parts that do the computing. But AI doesn't only compute. Training data, inference logs, generated data, the data AI produces keeps being stored. The computation ends, but the data remains. So over the long run, I think storage demand still has room to grow.
In that context, one move worth watching is the investment in Nanya, the Taiwanese DRAM maker, announced this March. The company's explanation is that looking ahead to an SSD market expanded by AI demand, it wants to secure a stable supply of DRAM, a key component in SSDs, over the medium to long term. For a NAND specialist like Kioxia, simply being able to source DRAM reliably becomes a competitive advantage. And SanDisk, Solidum, and Cisco joined the same capital increase.
So I don't read this as a Kioxia-only strategy. The players whose main business is NAND and SSDs are all trying to lock in DRAM supply for the AI era over the long term. My view is that this is part of that larger current. Against the integrated memory makers that have both NAND and DRAM, Samsung, SK Hynix, and Micron, the specialists are shoring up their footing. The harder question is how long today's memory prices can last. Looking at each company's investment plans, I made a rough estimate of worldwide memory bit output. This isn't an official forecast, just my own back-of-the-envelope math. But output in 2028 looks like it could be roughly 1.5 to 1.7 times the 2026 level. If Chinese makers expand more than expected, it could run a little higher. That's a substantial increase, but AI demand is growing at a similar pace. Here is what to be careful about. Demand growing and share prices rising are completely different things. The memory industry has ridden this roller coaster many times. Prices rise, everyone invests, supply increases, prices crash, output is cut, and then supply runs short again. And what struck me this time is that inventory matters more than production volume. In the memory market, a small change in end demand moves orders to manufacturers by several times as much. Fearing shortages, customers lock up supply. Once they start to have too much, they all stop ordering at once. The downturn a few years ago was triggered by customers drawing down inventory. In the market, you'll find forecasts that NAND supply and demand improve from the second half of 2027, and also views that the DRAM shortage continues beyond 2028. In other words, DRAM and NAND won't necessarily move at the same time. My feeling this time is that the cycle may be a longer one. Now, the impact on Japan. Kioxia is one of the few large memory makers left in Japan, and a record profit is a bright spot for the Japanese semiconductor industry. While memory makers keep investing, I expect the demand to spill over into equipment and materials, the areas where Japan is strong. But there is something we shouldn't forget. The memory industry always repeats the same two lines. There isn't enough, and there's too much. I don't doubt that AI will change society, but a data center, once built, is used for years, so the construction rush will eventually settle. And if supply from Chinese makers ramps up faster than expected, the picture could change completely. Will the next turning point come in 2028 or 2030? Honestly, nobody can call that. Let me sum up. Kioxia posted its highest ever first quarter profit, driven by AI-related SSD demand and rising NAND prices. In the shadow of GPUs, the data that AI keeps producing is pushing storage demand up. But demand growth and the share price are different things, and the key is inventory rather than production volume. Believing in AI and believing the memory cycle is gone are two entirely separate matters. Let's watch the news with that in mind. That's all for today. I'll keep bringing you semiconductor news and analysis, so if you found this useful, please like, subscribe, and I'll see you in the next video. This has been Ty on Semiconductor News Decoded.